Hi, how you doing? Where are you coming from today? Uh, Thank you for being here in a day that you're not supposed to be here. I'm very grateful for it. And today we're gonna do a quick review of. Hi, Christina, my dear. How are you? Today we're gonna do a quick review of what has happened uh, in the last couple of weeks in the Coliving world and the news that today the city of New York and Boston for surprise for some people that had no idea what's going on in the co-living world. And as always, I'm going to start with my three favorite words. I'm going to share my screen here. Let me see if I'm doing this correctly because my team is off today. So, of course, they're off. So, I'm not it by myself. Let me check. Yeah, present. Hold on. So, who am I? My name is Clara Arroyave. I am your favorite co-living coach. And every time, remember, I start with this with the three C's of co-living. What are the three C's of co-living? Can someone tell me what are the three C's of co-living? That cost, community, and convenience. And that is what you have to always take into account when you build a co-living product. Always, always, always. If there is no balance between two or three elements, there is not a suitable co-living product ever. About me, my name is Clara Arroyave. This is me 40 pounds ago when I started my first co-living business about 10 years ago as a co-living arbitrage in the city of Boston. And back then I started with 2 apartments in arbitrage. You know, arbitrage is like, I call it the Oreo cookie method. When you lease one place, put the furniture in, and then sublease by the room, all utilities included. I grew that company to $42 million in assets and 15 employees. I acquired my business competitors and I grew. We were doing about $2 million in sales. A business partner, 5 employees, 17 subcontractors. And with COVID came, I have to give everything to another competitor, like right here to a split spot. And I had to go and file for unemployment. So those $42 million and 3 years, more than 3, almost 4 years in business taught me everything that I'm sharing with you today and give me the possibility to be your favorite coach, because not only I share what I learned, I share what not to do, and I have taken a driver's seat in everything that is going on in the world of co-living. So that's to start. I want to talk about today the big opportunity and the takeaways of Nashville. Why Nashville? And why Tennessee? I had the honor, sincerely the honor, to help open the Tennessee market for past trees like about a week ago, Thursday ago, in a big event with Pace Morby and all the big names. Like, you know what the hell I'm doing here? And they're like, wow. And when I started digging into the numbers for co-living in Tennessee, it's like, wow, why no one is paying attention to this? So this is what I put into your radar for today. And look at this number. The total market for Tennessee is 250,000 people that cannot afford rent. And why is that? Because they're making $7.25 an hour. That's the minimum wage plus tips, and you know. But the studio, 1 bedroom is $1,200. $1,200, and 2 bedrooms is $1,400. So they will have to work just a minimum wage with no tips or anything like that. 3.7 full-time jobs to be able to afford a 1 bedroom. So can you imagine? And the minimum wage worker, if they were to do 30% of their salary, would be almost $400. And so numbers just don't work, right? So to make or to afford a 2 bedroom, they need to make $27. And we're talking about 900,000 people doing that. And the number of renters households that are single, there are 250,000. So the amount is great. Of the amount of market is great. And we're talking about people that work in all areas in Tennessee: hospitality, retail, logistics, healthcare, tremendous big number of people. But guess what? And I was very surprised when I was looking at this. So not only the numbers work in terms of what is the price per point, and I was showing the price of houses there, meaning if you get a single house in there that is about what, let's put to 50 to 80 in any of the state, in any of the towns that require this demand, and you put average price per room at $900, you get $7,200, right? Which is the difference is $50,000 a year. So I'm going to walk you through the math real quick. So if a regular house, the rent is $3,000, but you make it 8 bedrooms, 2 bathrooms, 8 bedrooms, 2 bathrooms. The difference here is 72, right? So the difference between 3 and 72 is 42. So 42 times 12 is 50,000, right? And I'm talking net numbers, not gross numbers, not net numbers. And then, so the difference is, if you were to do it normally, it would 36 versus 86. So 2.4 times rent. But here is the thing. You want to say, how come no one has seen this before? How much tapas splits are there? And this is what really, really surprised me. Look at these numbers. And these numbers are for like yesterday, a week ago. So very fresh numbers, like impressive numbers. And look at the opportunity. There are only 56, 57 rooms in Nashville right now in Passbeat. What? And the demand is 660 searches for rooms in the past 30 days. So there is like it's a lot of occupancy. There is opportunity for demand there. Look at the room prices, $223 in a shared bathroom and $333 for private bathroom. So that gives me $966, which is better than many other places, even better than Atlanta, better than Houston, right? For shared bathroom. And for private bathroom, $1,400 a month. What do you think about those numbers? Let me know in the comments. What do you think about these numbers? And those numbers are right now. If you go to the Passclick website, you're going to find them as well. Look at the occupancy. 81% occupancy. That is incredible occupancy for a small market that is just emerging. 3 days to first booking. Isn't that amazing? Right? And hold on. And I think it's 30 days. I cannot see in my screen, but it's like 30 days or 32 days to 80% occupancy. Like, what? Take my money. What are you waiting for? To me, this is incredible. The opportunity is great. People are willing to pay for a good pass split. I was looking at the market, really nice properties coming. I will jump into this opportunity, try to partner with people and try to find and start investing then before it becomes a market with 3,000, 4,000 pass splits, because the market can totally sustain that demand. Look at that. Why do I know that? Because you have 1 million people, 900 people making less than $45,000 a year, and it's a really good job. The job projections are growing significantly there, right? And from those 950,000, a quarter of 1 million people are households of one, which is the market for fast food. Like, wow. And they are struggling for housing, as we can see. So why would you want to help and jump into this opportunity? We're partnering with landlords, we're partnering with developers, and we're partnering with investors there to grow and take advantage. If you want to be in the list for everything that is coming for us on the Nashville market, let me know. I'm doing particular classes for underwriting and finding properties in Nashville. And if you want to be in the mentorship class, also let me know, send me a message. And we're going to start, taking Nashville by the horns, because this is just amazing opportunity. And the investor interest in Nashville is really good. And I was looking at these numbers, and doing just simple math, with 7 houses, you can get more than $200,000 profit. Let me show you the math, and let me know if you agree with me. So with one property, with 7 properties, you can do up to $20,000 a month cash flow. Here is how. If you find a house that has this average purchase price, I know it's low for Tennessee, but I'll show you the markets in a little later. I'll show you how. If the purchase price is to 20, to 50, even to 75, and you renovate for 32 to make it 8 rooms, 7 rooms, 8 rooms, you can do a down payment of 50, around 50, and you not even have to do an BR strategy, right? Just buying loan at 75% ABR. You have a mortgage of 1,000, right? And you had 5 rooms with shared bathroom at 966, and 3 rooms with private bathrooms. So you need to have 1, 2, 3, 4 bathrooms, or 5 bathrooms, yes. That you'll have 9,000 gross income. But we're gonna be conservative. And if we do this as 84% occupancy, not completely even occupied. I'm not being optimistic. I say, you're going to be all completely occupied all the time. No, I'm saying 84% occupancy. That gives me a 76 a month income, which is 92,000 a year, correct? And then you cover, property fees, taxes, past split fees. Past split is really ready to be there. I'm happy to introduce you to Corey, the past split manager for Nashville. So that gives us a cost of 35 a month, right? 3,500 a month. So let's do back to the numbers. 76 income, 35 minus 35 expenses, give us a profit of 41 minus the mortgage around, $1,000. So your cash flow will be, remember, this is 85% occupancy. That gives me a cash flow of 3,000. So 3,000 times 12 is 36,000, right? A year. It's way better than a savings account. It's way better with respect to all my friends in the stock market. It's way better than the stock market because the increase will be like more than 50% a year from your down payment. It's fantastic return, right? So if you do this and you repeat this 7 times, but you have to jump in this kind of quickly. If you start and you do this 7 times, an average, 8 rooms with 56 rooms, you can get, averaging with an average of 3,000 a month. If you control your cost and you have a good product that has the cost, the community, and the convenience, I'm seeking a path for you to get. So 3,000 a month, right? 3,000 a month for 7, 3 times 7, 21,000 a month with 7 homes. You can be creative. You can do anything that you like, to partner with people. But once you have a small portfolio that you can manage with 56 rooms, you can have a fantastic passive income of 250 a year. Am I right? And you can start, and these are the markets that we highly recommend. We recommend the big Nashville metro area has fantastic demand with Antioch, Hermitage, all the Amazon warehouse. The Memphis metro area has really big percentage of people also going there. So Memphis is interesting, and I'm trying not to murder this word, Murfreesboro. Murfreesboro is also very interesting. I will highly recommend also Murfreesboro as a next market. So those are my takeaways. Those are my my recommendations for the Nashville market that are fantastic. So number 1, that's my surprise. Anyone has any questions from Nashville? If not, I'll continue with my what I'm going to show next. Let me see. Anybody has questions from Nashville? Nope. Yes, no going once. Yes, no going twice. All right. So going into news. I'm going into news now. Let me share my screen again. There you go. 2 big companies in the world Coliving merged or were acquired one to each other this week. And I'm talking about June Homes and Outpost Club. June Homes has about 2,000 rooms, about between, look at it, New York, 1,100 listings. These are all, and it's important for you to understand that this is all arbitrage and property manager. This is not ownership management. This is also, think about a company that do arbitrage, right? Or property management, but in co-living. So June Homes has been around for a while, I think about 10, maybe little less than 10 years, 9 years. So over 1,100 rooms in New York, in co-living, in multifamilies, 866 in Boston, 200 in Washington, 169 in Chicago, 49 in Austin, 66 in LA, Jersey City, San Francisco, San Diego, and Dallas, and San Antonio a little bit, and Houston and Philly and Columbus. All right, so these guys just merged, and they are, again, simple, relatively similar as everybody else, co-living. The room can be either furnished or not furnished, and they do very nice work, very well managed. They just partner with my friends at Outpost in New York. They are focused in New York mostly, New York and a little bit in Washington, and they also do exactly the same service, which is co-living. They have a little bit of studios, shared apartments as well, and all over mostly New York. And they together, this is actually a very good brand. They're fantastic at SEO and branding. Well, guess what? Now these two companies are one. Why? That's a great question. Mostly for financial reasons, consolidation reasons, and like to shape the future. They want to create the Marriott of co-living in big density areas, solidify the brand, solidify the customer service, and solidify the resident experience in small multifamilies, which is something many of you are not familiar with, but it's very popular. And for your surprise, it has nothing to do with Passport. They have their own lead generation system, their own rental system, their own management systems, and many of these residents, as you see by the price, are not in the square of making less than 40,000 a year, because this is the price per room. So many of them are in the middle class. I would say middle class to middle upper class. So you can find prices from 600 to even 12,000, 1,000 to 1,200, and they use a lot of technology to stream a lot of operations. So they partner, and now together, the New York and June Homes and Outpost are going to become only one company, and then see up to 2,000, 2,500. So they have everything, and see furnished apartments, and in total they have about now consolidated 4,000 rooms. So if you know people speaking in the New York market or in the Boston market, in big cities, this is also a very interesting choice. Very organized, streamlined, and it's 4,000 units in the Boston and New York market. So fantastic, good for them. I have more news. I have more news and updates regarding this, especially for the Boston market, coming soon, and I'll share you more about it. In the meantime, I'm going to share a link here. We created a small group, which is called Coliving Capital Group. I'm going to put the link here in the comments. I invite you all to join, because I'm going to be dropping some special links and invites on my Facebook group, kind of about time. And number one is this weekend, this upcoming Wednesday, we're going to do a live chat with my friend Tiffany Green. Tiffany Green Fulton, we're going to talk about investing with integrity and what is all to come in 2026. And what do I mean by that? I mean, to create a product, right? To create a Passport portfolio, a co-living portfolio, you not only need to know, what numbers are you looking for, but also what type of client you want to serve. And many of these clients, are in different paths of life. And we want to make sure that the partners or the clients or the students that we have with us are invested with integrity, that are aligned with their values, and that what really you're getting into in the sense of, the investing and the purpose of the investment and the service that you're going to bring to the community. So it's like an alignment and a discussion of what is investment with your values coming, and what does that mean by that. And she's an expert about it. I'm so happy to have her. She's an incredible coach. And we're going to be doing some of the details in the Co-Living Capital group, but also it's going to be live in our Facebook. It's going to be live in our Facebook. It's going to be live in our YouTube later on. So please, I'm love to have you in our Facebook group as well. All right, that's all for now. And I want to know if you would like to have business planning for 2026 webinar or homework that I'm thinking we need about 4 hours for that. If you are interested in organizing what is your portfolio and how your co-living portfolio is going to look like, how many rooms you want to have for 2026, I'll be launching next week or maybe later on, if my time allows, a 4-hour class for everybody to plan your co-living portfolio. I want to see what's going on with Nashville. Let me see. Hi, Armando, welcome. There you go. One more unit, 2 more units. I love it. Look at this. 83 occupancy, even better than that. 3 days to first booking, 37 days to 80% occupancy, 58 units, meaning 58 rooms, and 10 times the searches. If you're not jumping in Nashville, I would say completely jump into the Nashville market. Let's see what is in Nashville. Sorry. Oh, this is new. Wow, look at this. 200 a week. Very nice, very long rooms. Not a fan of the decor, but okay. Very nice. Oh, look at this, it's very cool. 200 a week. Well, maybe this is the one that is 200 a week. 239. There is almost no rooms. Wow, look at this. Tremendous home. Oh, hey, Megan, how are you? Look at this. So 3 rooms left here, 1 room left here, 1 room left here, 2 rooms. So 1, 2, 3, 4, and 3, 7 rooms. 7 rooms total available in Nashville right now. Starting at 200 per week, 87 per month, and $12.99 per month with the private bathroom. So the more inventory, the price will go down a little bit, as you can see. And also it's quality of products. Definitely a market you need to put in your radar. The sooner the better. I will never start with this photo just as a co-living product or with a toilet seat on. Yeah, that's why. That is why. Very nice, very nice. See, I cannot even open the link because it's completely booked. Tremendous opportunity on the Nashville market. Does anybody? Hi, hey, how are you? Hi, Barb, how are you? Can I have your email or email me? Yeah, can you email me or have your email? Let me see, and I'll get you more information soon. Does anybody have any questions right now that I'm happy to address, or do you have a property that you want me to underwrite in these minutes? Because if it's a holiday and I want to respect your time. Oh, hi, Michelle. I was about to leave. I want to respect your time, and this is a short. I do have a YouTube channel. Yes, it's Coliving Cashflow. Hold on, I'll check it in a minute. YouTube. I'm just starting my YouTube, so feel free to make fun of me a little. Yeah, it's Coliving Cashflow. That is not it. Hold on, it's the other one. All right, I'll send it later. But yes, I have a YouTube channel. Pardon. All right. Does anybody have a property that they like for me to underwrite before we wrap up for today? Did I take a photo? Yeah. Sorry, I'm taking a photo because I'm without people. Oh, and everybody's showing up. Hey, man, how are you? Hi, how are you? You can.
Hello. How are
Hey, how are
you?
you? I'm
Good.
great. I'm great. I'm good. Do you have any property that you want me to underwrite?
No, I just happened to see your email about this call, so I'm really late, but
It's all right.
I'm actually going to be looking at some properties this week with another sister that was at the event in Nashville, Juliana. I think she's already talked with you, so we're going to be
Oh,
looking to
Juliana,
JV
phenomenal.
together. Yes,
Yes,
yeah.
phenomenal, phenomenal. Yes, she seems to be ready to go. She has 2 properties that already she's looking at,
Uh-huh.
and we review the numbers. And I already introduced her to an investor.
Yes, yeah, she told me.
Yeah,
So yeah, we'll be
yeah.
talking
So
this week. So I need to schedule my one-on-one with you, but yeah,
well,
I just
yeah.
joined late to see what was going on on the call. Sorry.
I will say, if you can, I will say try to schedule your one-on-one this Monday before our 7 p.m. class. I'm in PES community.
Okay.
No, I don't, let's say I don't need to be, well, respectfully, because I already know anything that I need to know. So, no, I'm not in PES community. I will have my own community. Uh, okay, does anybody has a property they want me to underwrite? Hi, Michelle. I hope you find yeah, Barbara, yes, I'll send you an email and I'll send you a link how to go into my calendar. In fact, let me try to do it now. It's not my calendar. Whoa.
Hey Clara, happy
Hola, how are you?
Thanksgiving. Good.
No problem. Yes. Were you able to find the property in Chicago that you were looking at?
Yep. So I connected with
The realtor,
Clara
nice.
Wednesday. Yep.
Okay.
And
Yes.
she's gonna check it out and then possibly come up with some other options.
Oh, fantastic. I'm glad. Fantastic.
Yes.
Nice. Yeah, that's part of my community and my work is I commit with all my students to find them a property in 30 days or I will die trying in 90 days actually, and I'll die trying. No, no, I won't die, but I will say that's my commitment, and I will coach them for free until they get a property or their first co-living property. So that is what's going on in my other in my community. Okay, Barb, you can schedule your first 15 minutes with me on the link I put in the chat in the comments, and I was just chatting in how to get your investment going and the news about Nashville and the mix or the blend between June Homes and Outpost. They are the largest operator right now for me. I will say middle to upper class co-living rooms in New York and Boston. There are many other operators. There are many other people. And surprise, surprise, none of them use Fastly because A, is too expensive. B, but that is not even A. That's just the market. They have not even reached that cities yet. They're just starting to touch that city because Fastly is more center of the United States. And these companies have grown for years and years before even Fastly was, on the picture. So that's why. So you say, oh, life in New York is impossible. So that's what they do. They serve the New York market, the Boston market, see in co-living. There you go. They serve the New York market, and they have their own software, their own community, their own online employees, and I know them for a long time. So it is completely different to what you have seen. It's completely optimized by software. This is like digital. They do virtual staging, as you can see, because at the end they lease the rooms either with rental furniture or just completely vacant. And they do matter for matter 3D maps of all the properties. So it's completely a little bit more automated, a little bit more technology oriented than what Fastly has. Really good service because the demand is gigantic, and it's not because the demand is gigantic because the market is bigger than what Fastly has told you in many areas. Meaning, it's not only the market for people that makes 45,000. The market is way bigger, and that's what even if to start with Fastly in Nashville, I say the demand is 250,000 people, is way bigger than that. The young professionals, the grad students, people that, hey, I just graduated from college. I don't want to go back to my parents. I want to be with my friends and just rent a house or do co-living and get my internship going. That is a different market that requires a different product, a little better product, but willing to pay a bigger even premium than what you're getting now, right? So it does not have to be always the lowest of the pyramid for you to have a successful co-living operation. That's my point. That's what I want to come across. That's it. So if you want to book a call with me, I put the link on the chat right there. Okay. Oh, Barbara. All right. Dallas. Is that a property you want me to review? Hold on. Barb, is that the property you want me to underwrite for you? I assume. There you go. Let's check. Might be friendly. 4127. That's a whole building. What part of the property is that you're looking for? Because it says it's a whole building. Is it a building? Yeah. But it seems that to be a building, not a property to underwrite. Can you be more specific?
Yeah, it's a building.
Okay. And you want me to underwrite this building for co-living?
Yeah, that'd be great.
But
Please.
can you give me more details, because Silio's not being specific on the building information?
Yeah, that's all I have is just a listing.
Okay.
I have like a bunch of them, and I just pulled that one up. It's just 77 units. There's a woman I'm working with. She is interested in helping challenge
So
community.
do you want to buy the whole building, is what you mean?
Yeah.
Okay. And how many bedrooms? What is the layout?
There's 77 doors. I think they're all 2-bedroom.
So that's the issue number one. And for Barb, so 1-bedrooms don't work for co-living, as we know, because that is not co-living in 1 bedroom, right? And the ones are ones. I'm looking at the address right now online. One doesn't work. 2 2s also do not work. Why? Because when you divide versus what people can pay by the room, it's exactly about the same as the regular rental. So there is not really upside unless you make it a 3-bedroom. And there is no space here to make a 3-bedroom. So co-living really starts at 3-bedroom. Either you can make a few of these a 3-bedroom, but I don't see how, or you start with a building that has minimum 3 bedrooms, like the ones we have here in Boston that are 3 bedrooms or 4 bedrooms that are completely co-living, but 2 bedrooms are, I don't know, don't work for co-living.
Okay.
So you can buy it and optimize, but the only way it works is you make it a 3.
Do you JV with people? Like, would you JV with me on a property? Great.
I potentially, but not in this one because it's a 2-2. So if you make it a 3-2, but everything has to be 3-2 and 3-2 plus. Let me give you an example of what we have going on in Boston, like this one. I'm not related to this one, but it's a fantastic example of how co-living works in Boston. So floor plans. This is a commercial co-living, what I call it, commercial co-living. 89 apartments, 89 apartments, and 279 co-living rooms, a few suites and a few affordable suites. But when you look at the floor plans, right? So look at the 4 bedrooms. So look at this. 1, 2, 3, 4. And from these 4, there are 2 with private bathroom and 2 have one shared bathroom. So it's 2 bedrooms, 3 bathrooms. Some bedrooms, the smallest ones, are 1,550. The ones with private bathroom start here like even at 2,000, right? But is the business here is the density and the individual pricing. So 1, 2, 3. See, minimum 3. This is a 4. So for 2 started at 1,550, which is fantastic price for January season. And this one 4 started at 1,900, all inclusive, very for. This been in the market for less than 2 years and produces about $500,000 a month in rent. I know too much about this building. It was $10 million for the land, $28 million for building. It took 18 months to build after permits and dealing with the city. That I'm not even counting that time. So 10 and 28 plus, so 38 million total, right? 18 months, 2 years, little longer than 2 years to bring it to market. And they did a cash out refinance for $50 million and sold it for $50 million to a private equity investor. That is doing really well right now. So something bigger like this with more demand, perfectly fine. There you go. And they only ask, look, and this is why people go to co-living. One $500 security deposit right here, right? Lock and fee for FOB, $100, only one time. And home essentials, if you want to buy a insurance, and if you want a parking, is $375. That's it, and then just rent. So they pay rent, they pay security deposit, $100 for the fee, and if you want parking. So that's why people go to co-living, the lower entry cost. Even you think that that is not a lower entry cost, it's a lower entry cost for us. That's it. So something like this, I'm interested. And if it is bigger areas in cities that have sustainable demand, yeah, absolutely. Why not? Okay, so that building, no, but thanks for bringing it. I like the way you think. That's it, team. I'm very thankful for coming up today. How many? They don't have to pass a credit check. They have to pass an application check because many of them are internationals. They do not have credit, so they need to pass. An application, and they have a system and a software for that application. That's a different system, but yes, they have to pass a verification for it. Yeah, they have to pass some sort of verification for credit check. Absolutely, of course. And if you are interested, I will share an email later on or Monday about the 4-hour co-living business plan. Me too. 4-hour co-living business plan for 2026. I'm going to bring that to market next week and do a 4-hour webinar and plan your business, how many rooms you want to have at the end of 2026 when, it's Thanksgiving a year from now, and we're going to see each other, celebrate with coffee, that will reach the goals of the room that we want to have. Because if you don't plan, then you plan to fail, right? So business planning for 2026, that seminar will be coming soon. Thank you all for coming today. Have a fantastic, don't spend too much, but just enjoy with your families and loved ones. And thankful for you all. Ciao. Thank you for being here.
Thank
Bye.
you. You too.
Thank you so
Bye.
much.
Ciao. Bye.